Welcome back for another top-notch video. This week, guys, we'll be talking about the week of November 4th through November 8th. We always tend to take a break during fourth quarter, decide to come back a little early since we have a lot of market action. We'll get right into that. As always, this channel is about the TSP or Roth IRA and 401k retirement funds and accounts. For the TSP, we go over the CSI and F fund. For those in Roth IRA brokerage accounts and 401k plans, we go over the ETFs, IVV, VXF, EFA, and AGG. These markets basically follow the broad market, and we do that through the S&P 500, small caps, and then basically we have the Dow, we have international fund, and then AGG, which is bonds. Okay, so those are our different markets and what they go over, and we kind of do a broad over analysis of each of these funds, and then kind of go more into the Pacific charts. That being said, let's get right into it. So for this week, guys, our basically funds for the week were positive, had a very, very good week. We're up almost 1% with that C fund or IVV. S fund was over 0.5%, or VXF, and I fund was over up 0.5% as well. For the month, we were up as well, doing very, very well, with the highest being the C fund at over 25% for the year, which is a pretty incredible return. If you guys want to see that on a chart basis, the chart basis we have is right here. As you can see, our funds are all positive here, doing very well, everything over that 50% mark except for that F fund or AGG. So as far as market commentary go, we get these from TSP Talk. A guy named Tom does some commentary there. We just like to look over his charts and kind of see what he did. So basically what he is saying here is we are above this line, which is a real positive thing for our charts on the IVV chart or the C fund. But we had a gap that was here. Usually gaps are filled by the market. Still have a gap that is back here, and that's kind of backed by our moving averages as well. Could possibly see something to kind of consolidate this large move from October. That being said, moving to the S fund. S fund has had an incredible rally since the beginning of October. Fund has rocketed up since the very beginning. As you can see, here's the 200-day moving average here. That 50-day moving average did not cross that, and we are way above up here. Did fill this open gap in this very tight trend line here. Still moving above. We made it above this high here, hoping to make it now above this high here. Overall, VXF has not exceeded its 2018 cap highs. Really looking forward to seeing that in the near future. EFA has also had an incredible October. This fund has jumped even more so than the S fund. As you can see from our charts, it's been up a pretty good amount. And so with this fund, we did cross this red line here, which was good. Saw a large open gap here, and then a very short, very tight trend line here on an upward moving trend. Doing very, very well for October. Those are our different funds. The last thing we want to look at here is he's kind of going over the price of copper. Said on the last two times we came close to that moving average, we did see a downward trend with stocks. It's yet to be seen here. I don't really cover that stuff very often. I just want you guys to look at that and put it into perspective. Last fund I have here is the F fund or AGG. As you can see, it's fallen out of its trend line here, so I don't know where this will go from here. Just about moving below its moving averages here. Not the best fund to be in at this time. Now we'll do our general broad overview. The first thing we're going to look at is IYY. IYY is a general market fund. We look at it to kind of get an idea of what the rest of the market is doing. So we're just going to go ahead and look at that really quick. With IYY, we're seeing very good things here. As you can see, you have a lower high here, then we had some consolidation. I'm sorry, just a high here, and then we had some consolidation in here. Kind of sketchy here, not seeing that higher high, but then we did push above that, so that is really good to see. Possibly seeing a head and shoulders pattern, a large shoulder, a small head, and then a large upward shoulder here. Moving forward, we are above that 200-day moving average. 200-day moving average is sloped up, so it's a very positive sign. Above all our moving averages, doing very, very well there. Overall for IVV, looking at it on the chart perspective, as you can see, on our 4-hour chart, we are negative with our oscillators, and we're sitting right on that line, kind of an indecision point to see what folks will do. On a 2-day chart, we are just about capped out, very top there. As you can see, we're sitting at the D oscillator is sitting at 5.76, and then 5.70, but we still have Monday to go through on that. Kind of looks like it's topping out, but that blue line is way above. Our PPO line is way above our red line, our moving average line. Good to go there. On a weekly scale or long-term basis, charts just crossed over. Usually we get about 3 to 6 bars here, or about 3 bars in, so might see another 3 bars, another 3 weeks of positive movement, or we can start to see this come lower. But this is very positive on a long-term basis. Got some mixed results on a mid-term basis and on a short-term basis. Have to see that with IYY. Again, that's a general overmarket fund to kind of get an idea if we should be in stock or equity funds, which is our CS and I funds, or EFA, IVV, or VXF. Moving on with IVV, this is our C fund, the S&P 500, kind of seeing very similar salt as the IYY. As you can see, a lot of market action up and down here, moving in and out of these moving averages. Looks like we finally did cross these moving averages. We have a good breakout here, hoping that will hold. We are above these trend lines here. Really good sloping uptrend here for the 200-day moving average. Ever since we saw this start to slope up in September timeframe, looking really, really good here. Overall for the fund, things look very positive for IVV. On a chart perspective, looking at that chart, we're going to pull that up for you in just a second here. So for IVV, we are looking at a long-term basis. Things look very positive, kind of like IYY. On a mid-term basis, things look very positive. Same kind of story, kind of looks like it might be topping out. Look at this action, guys, ever since the beginning of November, or October. Had some really, really positive up days all the way through. Looks like we might need to consolidate a little gains, kind of like we saw back here where we had some large gains here and then we had some consolidation. Maybe we'll get to see a little bit of that there, but markets for the most part have moved very, very well for the month of October. And then on a short-term basis, as you can see, a lot of indecision there as well with IVV, or the C fund. Moving forward to VXF. With VXF, we're going to go ahead and look at the charts, tables here. With the tables, look at the volatility we've seen this year, guys. Pretty incredible. A lot of drops and ups and downs, a lot of consolidation, a lot of just heartbreaking moments in this year for those that are buy and holders, slash if you're trading stocks, you could have done either very, very well or very, very badly. But overall, we did see, we were very kind of worried about this 200-day moving average, but every time we've been able to get past that 200-day moving average, we've hit this line here, which has been really significant at the 113 line. And overall, every time we've bounced below that 200-day moving average, which has been really concerning here in March, April, June, and then in August, and then again in October, we've been able to recover, which has been excellent. Really hoping to get above these highs here to see something move forward. We have a very big, broad trend lines moving forward. And as you can see, this is a 9-10% gain right off the beginning of October. That's a really huge gain. Overall, let's look at it from the charts. With our charts, as you can see on a short-term basis, our PPO line is below that red line there and it's decreasing. So on a short-term basis, it doesn't look so great. On a 2-day basis, starting to see a little bit of a drop there, but our PPO line, blue line, is above the red line. The de-oscillator is starting to move down just a tad bit, so keep that in mind. And then on a long-term basis, our weekly chart, weekly basis, we like to say, again, this looks very similar to what we saw on some of our other charts. We got about 3 bars positive here. Things look well moving forward. We'll have to see where things go. A lot of consolidation here when we were below. Hoping to see, we saw 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars. It'd be great to see 6 to 10 bars in the positive territory moving forward with VXF or the S fund. Moving on to our tables with EFA. EFA, international markets have exploded since the beginning of October. We moved from about 64, which we've been at for almost the entire year, to almost a 68, which is getting very, very close to its 2018 highs. Now, this chart hasn't peaked in quite some time. Really looking for this breakout to continue. We did make it above this really important line here, so that's really good, above that 67 line. And on a chart perspective, EFA is doing well as well. On a long-term basis, as you can see, we've had quite a few bars above this. If we would have bought this back in September, we'd have done very, very well. So good things there moving forward with this chart. On a 2-day scale, moving down just a tad bit, so we want to be careful with that. Midterm basis, and then on a short-term basis, our 4-hour chart, we're starting to move negative there. So maybe not good to buy in the short term, but long-term buy has worked out very well if you were in this fund since September. Our last fund is AGG. This fund was doing very, very well all year, and then we've had some consolidation since the beginning of August. August really, really took off. Saw some decline there in both September and October, and now he broke this trend line here. Did not make it above this very critical line on the top at that 114 mark. On a chart perspective for AGG, from a long-term basis, we can see on a weekly chart we are in the negative. Still a negative. It looks like it might be coming out here a little bit, but still not a good position to buy at this point for a long-term basis. On a mid-term basis, chart is negative, not a place to buy at this time. And then on a short-term basis, let's pull up that short-term basis. Our PPO line is below that moving average line, and our de-oscillator is in the red. So not a good fund right now. As you can see, I would probably stick with some of the other funds that we have, and that will bring us to our allocations for the week. So with our allocations, as always, we like to show this up towards the end of our videos. We are sitting with the C fund up 50% there, and then we're also sitting with 50% in the S fund or VXF, 50-50 allocation, all equities, and with new allocations going into those two funds. Overall, we feel pretty good about our position. The last thing I want to show you and bring up is how we are doing for the year. That's really important to this channel to kind of let you know how we're doing, what our strategy looks like. So we're going to pull this up and compare it to the funds here on TSP Talk. Again, TSP Talk is a website. You can go check them out. Pretty cool. So as you can see, the best fund that is going on for the year is that C fund at 25%, S fund at 22%, and then the I fund at 18%. How does that do compared to our averages? So I'm going to pull over our TSP sheet and what we have. If you guys are interested in getting the sheet, go ahead and write it in the comments below. I can definitely give this to you. Something to use that you can track your gains and losses. So as you can see, for the TSP channel, this is what we've contributed so far this year. That's what we've invested, our gains and losses for the year. Done pretty well. We've only taken one loss this year, and that was in the month of October. That did hurt us quite a bit, actually, from where we were sitting. We were sitting right about even with our other TSP funds. Now we are a little bit below. We're sitting at 18% gain for the year, so we're about 5% behind on some of those major funds that are gaining for an average of those three funds put together, I guess you could say. So we're about 18%, not terrible. We really wanted to try and conserve some of our gains for the year. Once we get into the fourth quarter, we're not as active in fourth quarter, so that means in October, November, December, we are less active due to just traveling and just not being around, being able to watch and monitor charts. But overall, we feel pretty good about where we're sitting as of November 7th on Friday. As you can see, I have if you're wondering about these two columns here, this is my simple interest column, and then I have my compounded interest. They are a little bit different. As you can see, simple interest is about 7.58, whereas compounded interest, we're sitting about 18.67. Really appreciate Scott Zanes on the Facebook group, TSP group, for pointing that out and showing me how to work those numbers. It's been great. That group's been great. If you guys are interested in them, I would definitely recommend checking them out. Overall, for the year, we're sitting pretty well, sitting right around 59,000 for our account, and we've earned about $7,000 in interest just this year alone. So with that 18.65%, we compare that over here again to our numbers. Let me pull that up. So as you can see, 18.65% compared to our other funds, well above the F fund here, and then we're just about sitting even with our life cycle funds, right around the same percentage as our life cycles, and then of course about 5-6% behind the 7% behind the C fund, a little bit behind the S fund, and then right about even with just a little bit ahead of the I fund for the year. So that's where we're sitting. Overall, not terrible. Just really want to make sure we keep and hold onto those gains until the end of the year. That's just a really good year. Typically, markets turn anywhere from 8 to 10%, so we are doing well above that this year, doing very much better than last year. Again, if you guys want this, we can go ahead and there's a way for you guys to get this chart here. We do keep it on a Google Doc sheet, which can be found here. I can pass this link out or put it in the comments below. As always, please like, subscribe, or share the video. Really do appreciate you guys' time and support. We are back. We took a little less break this time around. Appreciate you guys being around, and again, thank you for your time. That's another top-notch video. We'll see you guys next time.